Bausted Heavy Industries Corp, the shipbuilding arm of Bausted Holdings, said it has received a letter from the Minister of Finance Inc. signaling its intention to acquire BHIC's entire 20.8% stake in Bausted Naval Shipyard. The stake is currently held through BHIC's wholly owned subsidiary, Burstim Industries. In a boss filing, BHIC said the terms of the proposed acquisition are still subject to negotiations between the parties and that any further material developments on the matter will be announced to Bursa Malaysia Securities accordingly. On May 26, Defence Minister Datuk Sri Muhammad Hassan was reported as saying that MOF had established a special purpose vehicle to take over BNS, which is responsible for the controversial 9 billion littoral combat ship project. The contract was signed back in 2011, but not one ship has yet to be delivered, despite Putrajaya having already shelled out 6.08 billion ringgit. Muhammad had said that despite the ministry taking over the LCS project, it will still be overseen by a project monitoring committee jointly chaired by the Secretaries General of the Treasury and Defence Ministry. BHIC is 65% owned by Bausted Holdings, which in turn is 78.8% owned by Lembaga Tabung Angkatan Tentera, which is in the process of taking the mothership private. LTAT also holds a direct 8.16% stake in BHIC. Meanwhile, Bausted Holdings reported a net loss of 62.8 million for its first quarter, compared with a net profit of 290.3 million the year before due to lower contributions from its segments and higher finance costs. Quarterly revenue declined by 6% year-on-year to 3.2 billion ringgit. AmBank Holdings saw its net profit improve by 9.2% year-on-year to 427.91 million for its fourth quarter due to an increase in the group's fund-based income from interest-bearing assets and increase in the non-interest income. Revenue for the quarter grew by 3.3% year-on-year from 1.12 billion to 1.16 billion ringgit. AmBank also declared a final dividend of 12.3 cent per share, which brings the total dividend for the year to 18.3 cent per share, a dividend payout ratio of 35%. For its full year report card, earnings came in 15.5% higher year-on-year to 1.74 billion, while revenue ticked up 1.6% to 4.74 billion from 4.67 billion ringgit. According to AmBank, its gross loans and financing grew by 8.5% from 120 billion in FY 2022 to 130.2 billion in FY 2023. Customer deposits increased 6.3% to 130.3 billion, primarily fueled by current account and savings account balances, which grew by 13.2% to 48.8 billion ringgit. Group Chief Executive Officer Datuk Sulaiman Tahir says the group wrapped up FY 2023 on a high note, underscored by significant contributions from the majority of its key business decisions. He points out that AmBank managed to surpass the ambitious goals it set at the start of the year, including achieving a return on equity of 10%, fortifying its balance sheet and improving its dividend payout ratio. Moving forward, Sulaiman says the bank is keeping optimistic while being acutely aware of the potential external challenges, such as the volatility in the global growth trajectory and heightened geopolitical tensions. As such, he says AmBank is eyeing 6% loan growth for FY 2024, focusing on borrowers from small and medium enterprises as well as from selective retail customers. He adds that the robust domestic demand, labour market resurgence, steady execution of multi-year investment projects, and the anticipated increase in tourism activities experienced in FY 2023 should continue to buoy the group in FY 2024, albeit at a more measured pace. A decline in average product prices coupled with higher utility and fuel costs dragged Petronas Chemical Group's first quarter net profit to 532 million, down 74% year-on-year from the 2.08 billion it posted a year ago. This was despite a 14% improvement in quarterly revenue to 7.56 billion on the back of the olefins and derivative segment's higher sales amid the weaker ringgit versus the US dollar. Touching on its prospects for the rest of FY 2023, PetChem says its operations operations are expected to be primarily influenced by global economic conditions, petrochemical product prices, utilization rates of production facilities, and foreign exchange movements. PetChem expects the product prices for olefins and derivatives to soften following demand uncertainty amid global inflationary pressures, while fertilizer and methanol product prices are expected to stabilize, supported by improving demand. Managing Director and CEO Muhammad Yusri Mohamed Yusof notes that in the long term, the chemical industry is expected to continue its growth trajectory of about 3% per annum, driven by rising consumption in a wide number of expanding industries, including pharmaceuticals, automotive, and construction. He adds that PetChem had mapped out its sustainable growth plan for both basic and specialty chemical value chains to capture future demand. AirAsia X posted a net profit of $328 million for its first quarter as continued recovery in international travel saw revenue surging nearly fivefold to $548.8 million from $113 million previously. It should be noted that for the previous year's corresponding period, the airline reported a net profit of $33.6 billion, largely due to a hefty write-back of a similar amount as it completed its debt restructuring. AAX also pointed out that its shareholders' equity rebounded to $40.8 million versus a $285.2 million deficit in the preceding quarter, paving the way to address its PN17 classification subject to regulatory approval. Going forward, CEO Benjamin Ismail says the group remains on track with its strategy to resume services to its core markets in line with demand, with the airline currently servicing 16 destinations with up to 83 flights weekly. He adds that in the coming quarters, the team will further ramp up flight frequencies and is looking to launch more destinations to China while reviewing new services to Istanbul and potentially Central Asia. Ismail says that AAX has been in active engagement with third-party aircraft lessors to induct additional aircraft into its fleet, as the company's key priority remains ensuring more aircraft are activated within the stipulated timeline, with all safety requirements fulfilled. The airline currently has a fleet of 17 aircraft, with 11 being activated and operational. Touching on its financial position, AAX said its cash balance stood at $192.37 million as of end March 2023, while current liabilities stood at $679.52 million, followed by non-current liabilities at 1.86 billion ringgit. IT solution provider Cloudpoint Technology's share price on its maiden trading day on the ACE market closed 35.5% higher from its initial public offering price of 38 cents. At the opening bell, the counter rose to 75 cents, a 97% premium over its reference price, with an opening volume of 17 million shares. It was the most active stock on the bourse, with some 344.4 million shares changing hands. In a statement on Monday, Cloudpoint Executive Director and CEO Chung Wai Hong says the group's listing was perfectly timed to capitalize on evolving trends, aligning with tremendous market opportunities. He explains that enterprises are increasingly investing in new technologies to enhance business agility and competitiveness, driven by factors such as the growing emphasis on security and cyber defenses, the surge in cloud computing, and software modernization. On its financial results for the first quarter of FY 2023, Cloudpoint said its net profit tripled to $3 million, while its revenue improved to $19.4 million versus $10.25 million previously due to its recurring and project-based incomes.